Ready to dive into the world of venture capital.
Let's do it. It's a wild ride.
Today, we're using Andrew Roman's book, The Entrepreneurial Bible to Venture Capital, as our roadmap.
It's a good one. A lot of practical insights in there.
Yeah, definitely. So Romans kicks things off by talking about the VC boom, and it's pretty obvious why. Tech startups are exploding, everyone's chasing the next unicorn, but what exactly is venture capital?
Right. Good question. I mean, it's not just about getting a loan from a bank, right?
Exactly. It's different, isn't
Right.
it? How would you explain that difference?
Well, think of it this way. A bank is like that friend who loans you 20 bucks, expects it back by Friday.
Right, right.
VCs, they're more like, well, Romans compares them to strategic partners. They're not just lending money, they're buying into a piece of your company.
Taking a bet on its future, hoping for a massive payout down the line.
Exactly, like high-stakes gambling, but instead of roulette, they're betting on the next Facebook or Google.
So it's a calculated risk. But how do VC firms evaluate these risks? Do they just throw darts at a wall of startup ideas?
Definitely not. Those firms, especially the big players, they have pretty sophisticated methods for figuring out where to invest. They look at the market, see who else is out there, and most importantly, they look at the team.
The team behind the idea. Romans talks about that a lot, right?
Yeah, he emphasizes the management team because a great idea without a great team, it's like, I don't know, a car without an engine.
It's not going anywhere. And speaking of structure, Romans mentions VC firms often being set up as partnerships. How does that whole structure work?
So it's kind of like a two-sided coin, right? You've got your limited partners, the LPs.
The big money folks.
Yeah. Think pension funds, endowments, maybe even some real wealthy individuals. They provide the capital, the fuel for the whole operation.
Okay, so the RPs are the ones putting up the money.
Exactly. Then on the other side, you have the general partners, the GPs. They're the ones scouting for the startups, making the investment calls.
They're the ones in the trenches, so to speak.
Yeah, they're evaluating the pitches, mentoring the startups, and ultimately they're working towards a profitable exit.
Ah, the exit. That's the golden ticket for both the startup and the VC, right?
Exactly. And there are a few ways that can play out. A common one is an acquisition. You know, a bigger company comes in and says, hey, we like what you're doing. We want to bring you into the fold.
Like when Google bought YouTube. That's a classic example.
Exactly. That was a big win for YouTube's early investors. But acquisitions aren't the only game in town.
Right, because before a startup is even on the radar for a major acquisition, they often rely on a different kind of investor. Angels.
Ah, yes, the angels. They play such a crucial role, especially in those early stages when a startup is just getting off the ground.
So are angel investors like the minor leagues of the VC world?
You could say that, but they're incredibly important. Imagine those early Hollywood films, right? A lot of them weren't funded by big studios. It was wealthy individuals who believed in a script, a director, and took a chance.
Fascinating. So those were like the original angel investors.
Exactly. And the same principle applies to startups. Angel investors are often individuals, not these huge firms.
They write smaller checks, take more risks.
And they typically have fewer demands than a VC firm might.
So for a startup that's just starting out, an angel investor can be a lifeline.
Absolutely. It's not just about the money either. A good angel investor brings experience, connections, that kind of guidance that's invaluable when you're just getting started.
So they're like a mentor, a champion for your startup.
Yeah, someone who believes in the vision, even when it's just a glimmer in your eye.
But I'm sure it's still not easy to convince an angel investor to back your idea.
Of course not. It's still a pitch. You still have to demonstrate potential, convince them that your startup could be the next big thing.
So let's say you've got that brilliant startup idea, maybe even a prototype. You're ready to face those angel investors or VCs. What are they really looking for, besides that potential for a big exit, a big payout?
It's a good question. And Romans, he uses this analogy. He compares it to like evaluating a restaurant.
Okay, I like that.
You know, the atmosphere might be fantastic, the decor is great, but the food, the team behind it, that's what really matters in the end. And it's kind of the same with startups.
It's about having substance, not just a flashy presentation.
Right. A great idea is just the starting point. VCs, they're backing the people, the ones who can take that idea and turn it into something real, something lasting.
A team that can weather the inevitable storms, the ups and downs of the startup world.
Exactly. And it's not just any team either. Romans talks about the importance of having the right mix of skills, experience, but also that adaptability, that resilience. Because let's face it, the startup world, it's unpredictable. You have to be able to pivot, to overcome challenges, to adapt, basically.
Well, with the punches, as they say.
Exactly.
Does Romans give any specific examples of what a VC might consider a, dream team for a startup?
He does. He talks about 3DFX, which was this graphics card company back in the 90s. They had a really interesting team dynamic. They had that visionary leader, the one who could paint the big picture.
Right.
And then they had this tech whiz, the one who could actually build the product, innovate.
The builder.
Yeah. And then importantly, they had someone who could sell, a real sales pro, someone who could get that product into the hands of customers.
Get it out there.
Yeah.
So it's that blend of vision, execution, and knowing how to reach the market. That's what gets VCs excited.
Exactly.
But even with the best team in the world, the product still has to be a game changer.
Yeah.
What are some of the things that startups should avoid when they're developing their product or service? What are some common pitfalls?
Well, one thing that Romans cautions against is like blowing all your early cash on marketing.
The temptation to just throw money at advertising.
Right, because it's tempting to think, okay, we'll just buy our way into the market. But VCs, they're savvy. They want to see a focus on building something truly valuable, something that people actually want and need.
Building a solid foundation first.
Exactly. It's about the product, not the hype.
Makes sense. Are there any companies that Romans uses as examples of this?
He talks about companies like Facebook, Uber, PayPal. These companies, they didn't become successful because of massive ad campaigns. They focused on creating products that people loved and relied on, things that solved real problems.
That good old word-of-mouth marketing, it's still incredibly powerful.
Yeah.
But it does take a special kind of product to get people talking and sharing organically.
Definitely. And Romans actually quotes Steve Jobs on this point. Jobs said, "People don't know what they want until you show it to them."
Wow, that's a good one.
Right. True innovation is about solving a problem that people might not even realize they have yet.
It's that aha moment, like,
Yeah.
I didn't even know I needed this, but now I can't live without it.
Exactly.
So you've got the groundbreaking product, the A-team, but you still need to get it in front of the right people. How important is it to build a community around your startup in those early stages?
Oh, it's crucial. It's not enough to just have a great product. You need people who believe in it, people who will champion it, become evangelists.
Your early adopters, your brand ambassadors.
Exactly. And Romans, he uses the example of Skype. Back in the early 2000s, they weren't the only ones offering internet calls at the time, but they did something really clever. They tapped into the existing community of Kazaa.
Kazaa, that was what, file sharing, right?
Right, file sharing was huge back then. And Skype, they saw an opportunity there. They realized they could leverage that existing network to reach their target audience.
So smart, piggybacking on an existing community.
Exactly. And it worked. They understood the power of community and virality before it was, a buzzword. Another good example is YouTube.
Okay, yeah, they definitely understood how to go viral.
Right. Their embedding feature, which allowed people to share those videos everywhere, that was genius. And it wasn't an afterthought. It was baked into the product from the beginning.
They weren't just building a product. They were building a sharing mechanism right into it.
Exactly. They knew that the easier it is to share something, the more likely it is to spread, to reach a wider audience, create that, have you seen this kind of buzz.
And that organic growth, that's often what separates the successful startups from the rest. Okay, so you've got the dream team, a killer product, and you're building a buzz. But let's talk endgame. What are VCs looking for beyond just growth? They're not just in it for the warm fuzzies, right?
Definitely not. They're looking for that return on investment, and that's where the exit strategy comes in. Romans is very clear on this. VCs need a way to cash out, to see that big payout.
So what are some common exit strategies that VCs look for? What's the ultimate goal?
Well, the big one, the one everyone dreams of, is the acquisition. A larger company comes along and says, we want what you've built.
Like the Google YouTube deal.
Exactly. Google gets YouTube, YouTube's investors get a massive return. Everyone's happy.
Right. It makes sense for established companies to acquire startups that fit strategically. But what about those situations where it's not such a perfect fit? Are there other reasons a company might buy a startup?
Definitely. Sometimes it's about, Romans calls it finding an emotional buyer.
An emotional buyer?
Yeah, think of a company that's struggling. Maybe they're falling behind their competitors, and they see your startup as a lifeline.
They're desperate for what you're offering.
Exactly. Suddenly, it's not just about strategic fit. It's about survival. And that can lead to some pretty attractive offers.
Interesting. So understanding the motivations of potential buyers is key. Any other tips from Romans on how to create a winning exit strategy?
He talks about the importance of, not being afraid to leverage competition.
Oh, play hardball a little?
In a way, yeah. If you can get multiple companies interested, create a bidding war, suddenly you're in a much stronger position.
Makes sense. Okay, let's shift gears a bit and talk about that crucial moment, the pitch. You're in front of the VCs, ready to make your case. What does it take to make a lasting impression to secure that funding?
First and foremost, lose the novel. VCs don't have time for a 50-page business plan.
They want the highlights.
Exactly. Roman says bullet points are your best friend. Focus on the essentials, what you need, who's on your team, where you're at, and where you're going.
Keep it concise, impactful.
Exactly. And of course, the financials have to be rock solid.
Right, because at the end of the day, it's a business deal. They need to see a path to profitability.
Absolutely. Romans talks about the investor slide deck, and a core part of that is a strong financial model. You need to be able to show, with numbers, how your startup is going to make money.
So it's not just about passion, it's about demonstrating a clear path to financial success. But beyond the numbers, how do you actually deliver a pitch that resonates? Any advice from Romans?
He suggests having different versions of your pitch ready.
Different versions.
Yeah, like a 30-second elevator pitch for those quick introductions, a more detailed 2-minute version if you've got someone's attention, and then the full 20-minute presentation for those serious investor meetings.
So being adaptable, having the right pitch for the right situation. Does he give any examples of particularly effective pitches?
He tells this great story about the founder of half.com, the used book website.
Yeah, I remember half.com.
So during his pitch, the founder said this brilliant thing. He said, "How often do you really read a book twice?"
That's a great point. Most people, once they've read a book, they're done with it.
Exactly. And with that one question, he illustrated the need for a platform like half.com. It was genius.
Such a simple but effective way to make your idea relatable. It seems like storytelling is just as important as the hard data when it comes to pitching.
Absolutely. Investors, they want to hear the passion in your voice. They want to be drawn into your vision.
It's about connecting on a human level, not just a business level.
Exactly. So be genuine, be enthusiastic, and know your stuff inside and out.
That's fantastic advice. So as we wrap up our deep dive into the world of venture capital, what's the one key takeaway you hope our listeners will remember?
I think Roman says it best. VCs are investing in you, the entrepreneur.
The person behind the idea.
Exactly. They're looking for passion, resilience, adaptability, and that deep belief in your vision.
It's about the whole package. The team, the idea, the execution, and that unwavering drive to succeed.
Exactly. So do your research, build those relationships, and be prepared to put in the work. Securing VC funding, it's a marathon, not a sprint.
And on that note, we'll leave you with this. What problem are you passionate about solving? What's your why? That driving force that keeps you going. Because that passion, that's what will ultimately attract investors and make your startup dreams a reality.